Hi, good day everyone. So I'm back here again. I'm Dynamite FX. How have you been doing? I hope you are good. Okay, so this is going to be very quick, very fast. Let's go down to where I want to start this video. So please guys, if you're new to my channel, you're welcome. My name is Dynamite FX. Yeah, and please I promise to do videos, to upload videos teaching you how to trade, giving you some helpful tips on trading. So on this video I want to show you how you can actually catch spikes on 5 minutes, okay, without having to stress yourself waiting for spikes against the trend. Okay, so I want it to be safe at all times. So in this video I will show you the pros and cons of actually trading. Now I said, first of all, I want you to catch spikes the right way on its trend. That's number one. Number two, I want you to know why it is important to trade with a stop loss. I hope this helps. And number three, I want you to be overall, I want you to be successful in the overall. Okay, because the hallmark of every businessman is to make profits, right? So that's not different from us traders. So that's what this video is going to do. So right here and right now, I'm going to start first of all with how to actually catch spikes on 5 minutes. Okay, then I will show you what you should do and what you shouldn't do. Now this is it. The rules are the same. For this video guys, I am not using the 200 moving average. I'm focusing on just one moving average. That is moving average 10. This is the setting. Please, just this moving average 10. Please copy this. I'm not going to take long. We are using 10 here. Okay, we're using 10 here. And so after this we are using the MACD. Please, it's the same settings. Go to my previous video if you're new here. You will know the settings. Let me not dwell on it. So the rules here is 5 minutes, please. 5 minutes. This is for 5 minutes traders, guys. Number one rule is make sure the price has crossed for a buy on the MACD. Okay, the price must cross for a buy. That's one. There was a cross here for a buy, and after the cross for that buy, we have price going above it here. So market crossed around here, and then we are now looking for retest around these zones. So right now price is relatively above, and so we are looking for buys. So how do we get those buys? This is it. Every retest, small retest guys, small candle retest, not big candles. So for the pros, this is it. Small retest, price retested. Okay, this is the candle that retested. This is your entry, and below this candle is a stop loss. It could give a little space for the stop loss. This was the next opportunity. If you didn't see this one, this was the next opportunity for this trade. And of course, this would have been your stop loss, just a little bit below the wick. That is it. Now, you need to know this if you want to trade small accounts or big accounts. This is applicable for all accounts. And this is very safe. Very safe. Now, no strategy is 100%. But this strategy, out of 20 trades, you're definitely going to have, I can assure you, you're going to have at least 17 successful trades and probably have 3 trades that were a loss. But of course, having 17 successful trades out of 3, you actually didn't lose anything, right? So that's where we are now. So this was an entry. This was another entry. Okay, small candles, guys. That is it. If you checked the previous video before this one, I kept talking about entries on smaller candles. This is a small candle. Look at this. Follow this angle. Follow this arrow. You can see that the retest. Now, what's the rule? After you see this happen, the price had crossed at the MACD, and price is now, MACD is above the level. MACD right now is above. You can see. Let me shrink this. You'll see that MACD first of all came from down and then went up, down, up. So right now it's above. Okay, that's what I mean by when price is above. So now price is above. That's the first rule here. While price is above here, you're looking for only buys. And how are you looking for those buys? Look out for candles that touched the moving average and spiked back up. Smaller candles, that was one. This was the second one. Okay, and you have all of this for a catch. Always do it. Make sure that you're catching the very first retest after the cross. Because after the first retest, the second retest, the third retest might not really go smoothly because the trend has already moved. All you need from here to here is enough for you to make a whole lot of money. And then, like I said in my previous videos, please, you can actually swing with this catching all the spikes. Now let's say you took this trade here, this was your entry for example, and the trade was going in your favor. You can move your stop from here, you can take it up to this point. Let's say this was the last spike that went up, this was the last one that closed above. You could trail your stop from where it was and keep it under here and allow this market to continue to go, guys. So you've already had all of this for profit already. All of this was in profit. So let's move to the next one. And so you can see this price continued going up, and let's say it kept going up, it didn't touch your stop loss, you could adjust again to the next swing high. Let's say this was the next one to in real sense, and market boomed up. Okay, you would have been here, and by the time this other movement happened, before this other one came down, you would have been stopped out at this zone, and of course you've made a whole lot, guys. That's the first example. Let's move on to the next example. This is the next example, guys. This is 7th. So you have many opportunities to catch spikes as long as the market is trending upwards. How do you know the market is trending upwards? Please check H1. Once you see H1 buying, okay, once you see H1 price doing this, once you see price at H1, now H1 price buying in the sense that price is up also on top of 10 moving average. Price is also on top of it. When you see series of candles on top of 10 moving average on H1, price is buying at that moment, because we are actually looking for how to trade 15 minutes. So don't really bug yourself with all of those bigger time frames and analysis and all that. I just want to show you how to catch spikes, and it's working, guys. It's been working. So now this is it. This is the next one. Price crossed over here at the MACD. Please always look at the MACD first. That's the first rule. Price crossed this zone and stayed relatively on top. And here, this is what happened. Price crossed here, and this was the first retest here. This candle retested here and closed above. Anywhere around here was your entry. And then look at all the profit you had. Your stop loss, of course, below the candle, just like what you have here. Below the candle, right? A little bit below the candle. And then look at what you had to catch. You had all of this to catch. All of this was yours. Okay, all of this became yours to catch. Let's say you didn't see, let me change this color and make it a little bit transparent for us to see. So you had all of this. Let's say you didn't see this here, and you came and saw this here. You are still in it because price is still relatively above. Price is still here. Okay, price has not gone below yet. It's still trending upwards, so you still have a catch. Don't forget, even if you're to trade here, your stop loss has to be here. Previous low, you can use this, or you can use this. And don't forget, there is a zone here if you're a price action trader. So your stop loss should be below that box I have just dropped there, and then you still have all of this to catch. That's the second example on the 7th of September. I'm just trying to show you that you have a lot to catch. I'll be coming down to this shaded portion. I'm still talking about the strategy first, the do's, and I'll get back to the don'ts. I'll get back to the pros and the cons. Why you should trade smaller candles, not long spikes. Trade short spikes to enable your account stay alive, just in case you catch a spike and that spike happens to be long. If you take that trade at that spike, you're not sure if it's going to continue going that way or it will have to do a pullback. Sometimes the pullback might end up becoming a change of direction, and if it hits you at your stop loss, you know, if you were trading a small account, you would have lost a lot already, if not completely wiped out. Guys, I keep sounding this as a warning. Please just follow my kind advice. Okay, so this is the next example. Okay, price kept trending up, and now we have it here. Guys, is the chart, because of the way the chart is located, but I have marked it so that you know that price is actually trending up. It's still above, guys. You can see this. Price is still above here, but by the time I move my chart, okay, it dropped, it came down. Don't forget, MACD does not repaint. MACD actually shows you what has been happening. When it crosses for a buy and when it crosses for a sell, the data are still there. The history does not lie. It's always there. So you get to know, you can easily study the MACD better than you can study, you know, dropping moving average on the chart, and then moving averages that other strategy of, you know, following moving averages at oversold and overbought, men, that can really mess you up. So just pay attention, guys. Price is trending upward, and then you see spikes too that closes above the 10 moving average. This happens to be the stop loss. So this was your entry. Why? Because price crossed here, and then this was the first retest. You took this trade. Of course, this is stop loss. Then if you observe, guys, did you see that price never came back? Price never came back to this point. Okay, So price never came back to this point. Okay, it remained related. It remained where it was until it kept going up. So just imagine if you had done this, even if you had seen this trade here, you took it, and your stop loss was around here, you won't have been taken out of this trade. Okay, that's why you have to use a lot size that will eventually become successful. Because you're actually doing this every day, or at least 4 times or 5 times in a week, you will definitely have a lot of opportunities to buy. Okay, so you don't have to leverage, use all your risk or your account. Just follow it, and you see all of this was yours. It was all yours. Let's go to the next example. This is the next example, guys. Price was relatively trending upwards, and of course you can see there was a cross here, and after the cross, price crossed here, and this was the first retest. So this is the first candle that retested, and this is supposed to be the stop loss. If you took this trade here, this is your stop loss right under here, and of course this is your entry. What happened? You had all of this, guys, all of this to catch. That's a whole lot of spike, a whole lot. That's over 50 candles. What am I saying? This is over 70 candles on 1 minute. This is a whole lot. Don't forget, this is 5 minutes, and then market was still trending upward. Okay, and you can see the price is still above. And what happened here? There is another break. There is another retest that closed back above here. You took the trade. If your stop loss was closed by like this, it means this other spike, this other candle you're seeing here would have taken you out. Okay, this one I'm touching would have taken you out, but it closed back up. That's why sometimes it's good to give space, okay, for it to actually play out. So when it closed back up, okay, this market delivered. If you had seen this trade here, it would have still delivered. You can see. So guys, you can do something about the stop loss. Either you give it a little room, one candle or two, one tick or 2 ticks downward to give it space, because this can actually happen. Okay, and even if it happens, it was just 3, let's say it was just 3 ticks, one candle you lost, which is actually 3 ticks downward. Okay, so this is it went through successfully. Another signal. So it continuously, the same thing, the same condition up and down. You can see the same thing here. Price crossed upward, first retest. You take the trade here, and your stop loss here. Continuously, we can keep doing that on and on. The same thing here, guys. Do you need any other further proof? This is it. This is entry. This is stop loss. Simple. Please always give room for price movement. Okay, price can do what it wants to do, but don't take it too far, because if it's bound to work, it will work. If it's bound to fail, it will fail. And you have all of this in your accounts, dollars. Please follow me. It's that simple. You can see the conditions. Just use your eyes. You can see this was the one that closed above. Okay, but this was a long candle. But if you're a price action trader, you would have seen that something happened here. Price came, retested this zone, and then broke back up. But I said don't trade long candles, but this would have been our entry. Yes, by the strategy, because I don't want you to lose much, and this would have been your stop loss probably. Of course, you had some to catch over here. This was it, guys. So there are certain risks you cannot take when you're trading a small account, but if you're trading a big account, you could have taken the risk of maybe trading this candle with a minimal risk. Okay, you'll still be safe. So guys, just be going through your chart, backtest this, please. Don't just jump into it. Look at it. Price crossed for a buy, and of course after crossing, this was the first retest here, and this was your entry. Just imagine what you had to catch. So is this not easy, guys? This is quite easy and safe. This is so safe, so sweet, guys. This is it. The same thing happened here. Price crossed, and this was a retest. But of course, we don't trade long candles. But if you have a big account, you can take this. But this is the rule. Please always obey it. This is it. By right, your stop loss is supposed to be at the previous swing low. Else, you can drop it a little bit. I said give room. Even if you got knocked out of here, there was another entry here, of which this one respected. So I said out of 20 trades, you could lose 3 and still make 17. And that's 17. Of course, let's say you caught 60 ticks, 60 candles on each of the trade, or more than 60, or you caught 100 ticks, because whatever you're catching here, that is times 5 of what you would have caught on one minute. Okay, this is a whole lot of candle on the 1 minute chart. This is a whole lot. If 5 minutes candle is going to be giving you, if you caught 20 candles on this move on 5 minutes, it actually means that you caught close to 100 candles on 1 minute. That's what it means. So you are safe. You're actually very safe. You're making that money. Some people don't even go on a very real term conservatively. You don't even need to wait for 100 candles and 50 candles. You just need to stick to this strategy. Use a reasonable lot size. Let's say you are growing a $10 account. If you want to be catching $10 to $20 on this strategy daily or whenever it surfaces, you will definitely do that. You can actually make 100% of your capital. You can make up to 300 to 400% of your capital weekly, just abiding by these rules, guys. So this is all I wanted to say about the strategy. Okay, just one moving average in the MACD in consideration. One moving average, MACD in consideration. Okay, this is it. Always small candles, guys. Small candles. Now this is it. Let me go now to the next thing I wanted to talk about. The things you need to look out for, why you need to use a stop loss and all of that. Now these conditions were met. If you can see from here, price is up, price crossed. After crossing, there was a first retest here. Look at what I'm telling you. You are taking this trade from here. You know, we have to show you the good side and the bad side of everything. But like I've assured you that out of 20 trades, out of 100 trades, you should be able to successfully catch 90 trades and lose 10. That makes you a successful trader. Because if I tell you you're not going to lose at all, that's a big fat lie. You are going to lose at some point. So this is it. You took this trade here and look at price came boom down. Boy oh boy, girl oh girl, you're going to lose that first part of the money, that trade. And then it came back and you see this happened again. If you know market structure, you know that this retest was done. And this is it. Your stop loss still has to be where it is. You place your trade. And of course, either you use this level for your stop loss because of this low, or you use here. But plus and minus, your account is safe. And then that was just a little disruption on this chart. But if I was the one who saw this, by the time this market closed back up, I would have taken this trade because of the level where this spike was coming from. This was a good zone. This was a good zone actually. So the little retest, and then it spiked back, closed above. So I would have taken this trade. Or either you take this trade here or here, and it paid. So I don't need to dwell so much on this. Okay, it works. Now that's why you should use small. You should enter a small candle, not a long candle. Small candles, guys. Small candle, small candle, small stop loss, small candle, small stop loss. Please abide by the rules. Abide by the rules. So now, let me go back to show you other reasons why you should not trade long candles and why you should use a stop loss after trading. Yeah, you have to know that. Now this is it. This can fail. Like I said, okay, this is a normal trade. Okay, this was a normal retest. Yeah, so small candle. If this was a long candle, just imagine what you would have lost. If you had traded this candle, the candle that came before this, you would have lost so much. But now this was a stop loss. You got stopped out neatly, and then there was still another opportunity here to get into this trade. Price still came back here and gave you another opportunity. You have to keep trying, because you can't say because one failed, you won't try again. Because I've told you that it's a 90% to 99% guarantee. Out of 100 trades, out of 50 trades, you're going to lose just 5% or 2% or something of all the trades you've taken. So nothing much, nothing to fear. And so you saw this come back again. Your account is protected, and you would have recovered back the loss you had here, of course, and right here you would have made all of this yourself. So guys, please abide by the rules. Okay, enjoy the strategy. Let me know how it helped you, if it ever helped you. Backtest it, please. Make sure you're doing the right thing. Okay, don't trade long candles, please. Don't try to catch long candles, because at the time you're catching a long candle, that could just be that the trend is about to finish. That could just be like something like this. It could just be this was a retest. This was actually on a buy trend. This was a long one. Let's say you took this trade here. How many do you have to? Yeah, this is quite a lot. Okay, this is, call it 5, 10, 15, 20 candles on the 1 minute chart. But that's by the time you are losing this trade, this is more than 40 candles on a 1 minute chart, and it's not worth it. Please, you will always see, whenever you see long candles like this retest, there's either going to be a range or a pullback or a reversal in that market. So guys, just stick to the plan. It's either you took the right candle, okay, the small candle, and then you got stopped out with a small loss, and you're able to live to fight another day. I hope you understand what I said. So thank you guys. Thank you for staying patient, for staying to the end of this video. Please, if you haven't subscribed yet, please do me the favor of the kindness of, you know, subscribing. And I have a whole lot to tell you, a whole lot to show you. We are in this together, guys. And so for mentorship, like I said before, I would never ask you to give me money, to send me money to trade for you. No. That's why I'm teaching you anyway. I'm not stingy with this knowledge. A lot of people are stingy with the idea. They just come tell you, I made this, I made this, I made it. They don't show you the truth, the real reason. They don't tell you how to avoid the problem, how to escape the troubles. I mean, I've been open enough to show you this. So just do yourself the favor of learning. Don't give your money to anybody to trade for you. If you want to learn, maybe you need some guidance. Maybe you feel some people learn faster when somebody has to hold their hands and say, do this, do this. Well, that's okay. Okay, everybody learn at their pace. So if you want mentorship, maybe you are not, you just want to know better than what I'm showing you on YouTube, check my description below. My email is also, you can only reach me on my mail for now. You can only reach me on my mail for now. Drop a message for me, and I'll check it out and I'll respond. Okay, and that's it for now, guys. So see you in my next video. Thank you. Please like, share it, help grow this, help me, help my channel, help grow our community. Okay, thank you guys, and stay blessed.